Just so we start off on the right note, this thumbnail is not clickbait. I did not make a big title and get you all worked up only for me to get to the end of this video and then tell you that like only 2% of the population qualify. This has got nothing to do with first home finance, previously known as FLISP. It's got nothing to do with any government subsidy that is related only to middle income earners. In fact, there's a lot of high income individuals that have used this format to buy properties. There are also some lower to middle income earners that don't qualify for first home finance, and they have gotten some excellent results using this format to purchase their homes. Over the next few minutes, I'm going to show you how just about anyone can buy a property in South Africa with minimal effort and zero money down. I'm Sibulola Magwanyani, aka Sibulola the Estate Agent, and welcome to the channel where we make your money go further when it comes to residential property. If you haven't already subscribed, you're missing out on regular updates on how to make your world as a first-time home buyer or owner substantially easier. I really believe that one of the most hindering factors to home ownership are bond and transfer costs. I mean, if you want to buy a property of 1.2 million, you will probably need about 75 to 80,000 Rand upfront in your bank account before you can purchase your property. I actually have recorded a video about bond and transfer costs and how to calculate them. I'll add a link in the description below. 100% bond is when you purchase a property using 100% of the lender's money. So if the property is 1.2 million, then you're taking out a bond of 1.2 million. I know there's some people that obviously knew that, and I don't mean to patronize you. I just want to make sure that we are 100% together and that no one is left behind. Back in the day, 100% bonds were not as common as they are now. People would generally put down a deposit of, let's say, 10% or 20%. And even though in this day we use a lot of 100% bonds, there are times when the bank is not willing to finance more than 80% or 90% of the bond amount. Whenever you purchase a property, you always do have the choice of putting down a deposit. And that should always be your first choice when you can. And I explained that in great detail in my video called The Benefits of a Deposit. And I'll put the link in the description as well. But we're not talking about deposits right now. We were touching on transfer costs. Now, many times when and it's not a South African problem, it's a worldwide thing. When we struggle to save up for something, we end up using credit cards and personal loans and credit assistance. Now, when it comes to transfer costs, it's really not advisable to go that route. Remember that the more debt you have, the less disposable income you have, and thus the less house you can afford. Now, if 100% bond covers 100% of the purchase price, then today we're going to speak about 105 to 110% bond. So as you can imagine, it covers more than just the bond. It actually covers the costs that are involved with that purchase. So in other words, you wouldn't have to come up with this 80,000 Rand cash yourself. You would be able to include that in the purchase price. So like in this example, the property is 1.2 million and the transfer costs are 80,000. That means the bond will be registered at 1,280,000. Because remember, the bank is not giving you the money, you're borrowing it. You need to pay it back. I do think that there are times when people don't save up for transfer costs out of blatant irresponsibility. But I also think that there are times when people are financially handicapped or have financial burdens that have been passed on to them via someone else, be it someone dead or alive. And through this program of 105 and 110%, we are able to expedite this process of becoming a homeowner. I keep saying 105 to 110%, but that's because different banks offer different amounts and they give them different names. But generally, the accepted term is 105%. The same way that you'd find that, you know, we talk about bond costs and transfer costs, and yet we use one word when we refer to them, which is transfer costs, even though they refer to different, elements of the process, but we use one word. So even though it's 105% or 110%, we still use the term 105%. You're probably wondering who qualifies for this incentive. Go ahead and smash the like button if you're finding this content useful, and go ahead and subscribe if you haven't already, and click the notification bell so that you can be notified whenever there's a new video loaded. So first up, I have heard of banks limiting this to just youth, meaning under 35s. But, different banks have different criterias. So I wouldn't write it off just because, you are above 35. Just do a bit of research and find which banks will be able to assist you, but certainly don't just give up because of that. The second factor is actually about income. So you generally need to be earning 10,000 Rand in order to qualify for a bond. And as far as the highest amount is concerned, different banks again have different criterias, but you're generally looking at about an accumulated income between a couple or just one individual of about 125,000 Rand. That kind of makes sense to me, because if you're earning 130,000 and you cannot save up 130,000 Rand for transfer costs, you've obviously got a bit of a money management problem. And I, as a lender, don't know if I want to finance you. I don't know if I want to lend you money. I mean, it's a lot harder for somebody who earns 10,000 to save 10,000 than it is for somebody who earns 30,000 to save 30,000, right? Because if you're earning 30 grand, you can save costs in the sense that you can cut down on your gym contract, you can stop eating at McDonald's. There's certain, maybe brands that you can just stop using premium and maybe start using lower. But it's very difficult to cut costs when, most of your money is going towards food and petrol. Whereas if you're earning 130,000 Rand, there's a lot of places that you can, trim the fat in order to be able to come up with funds and save some money, right? Even if it means you must downgrade from your fancy apartment for 6 months or a year, just so that you can save up enough money and become a homeowner. But that's just my opinion. So as you can hear, I don't have a problem with the limitation of the high earners, but I'm done with my rant. You must also remember that there's not a lot of careers where you earn that kind of income as a starting salary, right? So generally people that are making that kind of money are upgrading or buying their second home, but it's very seldom that somebody who earns that kind of money is buying their first property. And the topic of upgrading takes us to the next requirement. You must be purchasing your first property. So if you are upgrading or you're buying an investment property, you're not going to qualify for a 105% bond. And let me tell you why. If you're purchasing a property of 900,000, but your current property you only owe 700, then you've got this 200,000 Rand equity, which means you don't need technically the 65,000 Rand for the costs. The fourth requirement is a good credit score. The bank is not just going to lend to every Tom, Dick, and Sipho. You must have proven that you've got an excellent way of managing credit before the bank will be willing to offer you this kind of incentive. And let me tell you why. When you get a bond, you're basically taking out a loan with the property as collateral. Should you ever default, the bank is going to foreclose on that property and try to recoup whatever you owe them. That's why they say it's not your property until it's paid off. If you buy a property of 1.2 million and you default, the lender is going to auction off that property and try to claim back as much of that 1.2 million as possible. Now, with a 105% bond, your loan is 1.28 million, but the property is only worth 1.2. So should you default in that first year, the bank is going to make a loss guaranteed, because the most that they can auction that property for is 1,200,000, but you owe 1,280,000. So the bank is not going to take a risk like that unless that person has got an impeccable history of paying their bills. So if you fit all those requirements, you can go ahead and speak to your estate agent or your bond originator or your banker and go ahead and buy your first property with zero money down. There is the option of using first home finance, previously known as FLISP. In this case, it would be less of a loan and more of a subsidy, so you wouldn't have to worry about, you know, making a repayment or paying the money back. However, the requirements are a lot more stringent, so you can check out that video and yeah, just check it out and see if that works for you. I'll catch you in the next video.